And here is Roland Lim once again from CNA's business desk to talk about all things gold. So, Roland, based on Olivia's explainer, we see that central bank buying seems like it's a key factor that's driving the gold prices to their highest on record. And what about People's Bank of China, though? I mean, is it the biggest buyer of them all?
Yes, indeed. China has overtaken India as the world's biggest gold buyer as of last year now. The People's Bank of China, PBOC, has been buying gold for 17 straight months now. That's the longest streak on record. And it's really trying to diversify its reserves away from the US dollar and hedge against renminbi depreciation as well. Now, some analysts say that China's gold buying spree is really driven by a desire to weaken its dependency on the US dollar as a reserve currency, especially after Washington weaponized its greenback in its sanctions against Russia. But at the same time, though, market watchers also say that China will have to stick with the US dollar as the mainstay of its reserves because China currently has more than $3.2 trillion in forex US dollar reserves, as opposed to gold, which is only 4% of that amount as at 2023.
So, Roland, aside from the central bank, I hear that Chinese consumption, whether it's jewelry, bars or coins, is sort of like reached record levels. So what's driving this? Is it because it's the whole idea that safe haven?
Well, safe haven for sure. I mean, Chinese consumers, they've always been interested in investing something or other. And there's always been two traditional avenues. That's the stock market and the property market. Well, both aren't doing very well, unfortunately. The Chinese stock market, it's in the doldrums. It's from a year ago, as compared to the other majors. Japan, for instance, its stock market is up 30% in the last 12 months, and the Dow Jones up 13%. Home sales of property prices in China also in the doldrums ever since the developers themselves have been mired in a debt crisis, liquidity crunch since 2020. So given the capital controls in place in China and the fact that they want to hedge against a weaker currency, they've turned to gold as well. And some of the numbers I can share with you that support this argument would be that last year, Chinese gold jewelry demand that was up 10%. Bars and coined investment surged 28%. So these are the usual ways that retail investors themselves actually go and invest into gold.
All right. I think I need to get some gold jewelry myself. Thanks so very much, Roland, for that.